Hello everyone, welcome to Just Invest Today, and today we are talking about Ray Dalio. We're going to talk about Ray Dalio's top 5 best growth stocks in his portfolio. This is all according to Yahoo Finance, and this is a useful list. This is a list that we can probably put these stocks on our watch list, or we can see if they're at the right price now. Because we have to wait for this market crash. We gotta wait until the price goes down on these stocks. And it's always good to have an amazing watch list so you know what to buy as soon as these stocks get cheap. So we have to look at his top 5 best stocks, his growth stocks to buy right now. So guys, if you don't know who Ray Dalio is, you're living under a rock. Billionaire Ray Dalio founded Bridgewater Associates, one of the most successful hedge funds today, with over $15 billion in assets under management. In 1973, when he was still learning the ropes of Wall Street, over the years, Dalio, whose personal net worth is close to $20 billion, has become one of the most prominent names in the finance world through an investment strategy that carefully bets on both value and growth stocks. Between March and June this year, the portfolio value of the fund has jumped by $4 billion. And he's been on a really defensive run. He has a lot of defensive stocks as his main holdings. But we want to look at the growth stocks. What does Ray Dalio look for growth, and what are the companies he's buying into? So let's get it. Let's go to his top 5 growth stocks and see if we can actually go deeper into these stocks to see if we can actually come up with good stocks to buy in the future. So number 5, Koopa Software Incorporated. This is an interesting company. I might want to do a deep dive on this. I don't know, but let's read some of the background. Koopa Software Incorporated is placed on the 5th list of the 11th best growth stocks according to Ray Dalio. The firm operates cloud-based businesses management platform and headquartered in California. According to the latest data, Bridgewater Associates owned 3,808 shares in this company at the end of the second quarter of 2021, worth more than $1 million. They put a buy rating on Koopa Software Incorporated stock, and they raised the price target to $315 from $280. So let's look at the stock price. Let's see what it's done. So Koopa stock, wow, it's actually been down 12% this year. And this is a very interesting business because it's cloud. And I feel like cloud is so hard to predict because everyone's going into the cloud business, and we already have like main players like Amazon, like Microsoft. So how much business is this company gonna get? So I'm not sure about this company right now, but this might be one to look at in the future. Tell me what you think. I'm gonna be trying to find more companies to actually do a deep dive on. So let's wait until the end of the video to find like good stock for us to do a deep dive on. 4, Lam Research Corporation is a California-based firm that makes and sells semiconductor processing equipment. It's ranked 4th on the list of the 11th best growth stocks to buy according to Ray Dalio. Bridgewater Associates owns 36,000 shares in the company at the end of June 2021, worth $23 million, only 0.15% of the portfolio. On September 21st, investment advisor UBS maintained a buy rating on Lam Research Corporation. So let's see what the stock price has done so far in this year. So starting from September 2020, Lam has done 81%, man. So that's crazy. It's an $87 billion company, 22 PE. This is in a good semiconductor space, which we understand has a lot of room to grow. This might be a good stock to do a deep dive on. I'm not too sure, but maybe if you guys want this deep dive, we can do it, but it looks like it's appreciated a lot. It's still 22 PE, which isn't too bad. So tell me what you guys want to do with the stock down below. We're going to find companies to do heavy deep dives on. Number 3, Intel. So I actually owned Intel probably 5-6 months ago. I sold it for like a 40%, 50%, actually like a 40% increase. So I got rid of it, but I'm not sure if I would buy it again. But let's go into the 3rd best stock according to Ray Dalio. It's a California-based firm that sells essential technologies for the smart devices. It's placed 3rd on the list of 11th best growth stocks to buy according to Ray Dalio. According to 13F filings, Bridgewater Associates own 35,000 shares. So let's actually see what Intel has done. In a year from September 2020, Intel has only done 5%. Whew. This is bad. It's bad since September to September 2021. But I had like a 30% increase. I got it on a nice, like kind of close to March drop when everyone said Intel was out, and then went back up to like around 63, whatever. Yeah, I went back to like 62, and I sold out there, and I got it around like 40 or something, 46. So I had a nice like 40% pop. But Intel might be an underrated company. They're doing big things. It's only a 12 PE, 221 billion market cap. I feel like they might be on the come up, but they have a lot of competition with Nvidia, with AMD, and all those crazy growth stocks we have over there. So we don't know. We might pass on this. Number 2, we got Nvidia Corporation. So this is the second on the list. The company operates as a visual computing firm and is headquartered in California. According to the securities filings, Bridgewater Associates own 21,000 shares in the company and at the June 2021. So this is an amazing company. We understand what Nvidia does, all about computing and the graphics cards and all that good stuff. Let's see what the stock has done so far. So Nvidia, a $541 billion company at 77 PE, which is really crazy, man. In a year, this stock has done 60%, which is insane, man. So Nvidia is like actually a company that would be worth a deep dive, but I feel like it's just so expensive right now. You're gonna have to actually wait probably a long time for this company to come back down to earth, which who knows when will that happen. But Nvidia is definitely a company to probably put on your watch list to look at. We'll see in the future what it does. Number 1, Micron is placed first on the list of the 11th best growth stocks, according to Ray Dalio. The firm makes and sells memory and storage products and is headquartered in Idaho. According to his latest filings, Bridgewater Associates owns 216,000 shares in the company at the end of the second quarter of 2021, worth $18 million. Maintain a buy rating on Micron Technology. It lowered the price target to 95 from 110, noting that memory stocks were under pressure because of pricing concerns. So that's still a huge margin right now. Let's see what the stock has been doing. So Micron at a 20 PE, $84 billion company in a year. Let's see, they had a 110 buy rating on this company, and 50, what has it done? 48%, which is pretty good in a year. And they still have a long way to go. It's saying it's almost 110.90, around 110.95 buy rating on Micron. So this is probably a stock that you could probably do a deep dive on, go in depth and see if this is a stock that you want to buy. I know there's a ton of write-ups on Micron, which is an amazing company. People see a huge future in this company because everyone knows that computer data, storage, people need more chips and all these crazy technology and cars and computing, everything. So this is probably the best company to buy that's undervalued right now, but do your own research. And honestly, my top 2 that I'm thinking about doing research on is Salesforce and Shopify. Those were the 2 companies I want to do heavy research on in case of a market crash, in case of a huge drop, and just see maybe these companies will get cheap, and then we have them as a buy rating right around the corner when it drops. Tell me what you think. Leave a comment down below, like and subscribe to this video. Thank you. Peace.